Welcome to Stocksees. Today, we will talk about Adobe, one of the most iconic software companies in the world, which has managed to associate its name with creativity and innovation. From Photoshop and Illustrator to Acrobat and Premiere, its products are used daily by millions of professionals, companies, and ordinary users. In recent years, Adobe has made a strategic shift towards the subscription model and cloud services, with a particular emphasis on the use of artificial intelligence. This transition now gives it a stable revenue base and opens up new avenues for growth. Stay tuned until the end of the video, and you won't regret it. Let's get started. Adobe organizes its activities into three main axes. The first is Creative Cloud, the well-known suite of content creation tools, such as Photoshop and Illustrator. The second is Document Cloud, with which it offers solutions for managing and signing documents. And the third axis is Experience Cloud, which is aimed at businesses and covers the needs of digital marketing, advertising, and data analysis. Thus, the company combines creativity, productivity, and customer experience in an integrated platform. But let's take a closer look at its financials. Adobe's annual revenue is around $23 billion, with net income of almost $7 billion. Earnings per share are over $16, and the net profit margin is around 30%, which shows the company's excellent profitability. Even more impressive is its gross profit margin, which is close to 90%, one of the highest in the technology industry. In terms of valuation, Adobe Stock is trading at a PE ratio of around 22 and a PS ratio of around 6.7. These numbers show that the market values Adobe quite highly, but not excessively, if we take into account the growth and stability it offers. In the latest quarter, the company reported revenue of nearly $6 billion, up more than 10% from the year-ago period. Adjusted earnings per share came in at $5.31, beating market estimates. For the next quarter, it is forecasting revenue of about $6.1 billion, and for the full year, about $23.7 billion. With adjusted earnings per share approaching $21. These forecasts show that management remains optimistic, but also cautious, as it knows the environment remains uncertain. Adobe stock hasn't performed as well as many investors expected this year. It's lost nearly 18% of its value since the start of the year, and is about 35% below its 12-month high of $558. Even though the company's third-quarter results were better than expected. With revenue growth of about 11% and adjusted earnings per share above $5.30, the market remains cautious. The main reason is that investors want to see tangible results from Adobe's investments in artificial intelligence more quickly. Nevertheless, most analysts maintain a positive outlook. Average price targets have been set at about $460 to $470 for the next 12 months, about 25% higher than current levels. This shows that despite the pressure the stock is under in the short term, the market still recognizes the company's momentum and growth prospects. Adobe has many strengths. First, it has a very strong brand and products that are considered standards in their field. The move to a subscription model offers revenue stability and long-term predictability. In addition, its investment in artificial intelligence with tools like Adobe Firefly strengthens its innovation and competitiveness. Finally, its international presence and large customer base make it less vulnerable to local crises. Of course, there are challenges. Competition is intensifying, both from traditional companies like Coral and newer startups that are leveraging artificial intelligence to create images and videos at lower costs. Global economic uncertainty can limit business spending, while the constant need for innovation requires huge investments in research and development. Finally, there is always the risk that the market will consider the stock overvalued if it does not see tangible results from new initiatives quickly. Overall, Adobe remains one of the strongest companies in the tech space, with solid financials, high margins, and growth prospects through artificial intelligence and cloud expansion. Its stock isn't cheap, but it reflects a business that has built trust and proven it can continually evolve. The big challenge going forward will be balancing innovation, competition, and profitability. For an investor interested in stability, a strong brand, and long-term growth, Adobe is a company worth watching. It's not a value opportunity in the classic sense, but a high-quality company strategically investing in the future of creativity and digital experience. What do you think will be the future of Adobe? Let me know your thoughts in the comments. Thank you for following our analysis. Stay tuned to Stocksees for market updates.